You're watching news headlines on mining.com. I'm Devin Murrigan. China has lifted its long ban on exports of gallium, germanium, and antimony to the United States. That move marks another step in easing trade tensions. Beijing's Commerce Ministry says the suspension will run until November the 27th next year, pausing curbs first imposed in December last year. That's after U.S. chip export restrictions. All three minerals are critical to U.S. industry, especially semiconductors and defense, and China dominates global supply, producing nearly all refined gallium and more than half of the mined antimony. U.S. officials had warned the original ban could cost the American economy more than $3 billion, largely through semiconductor delays. The decision follows China's move last week to suspend new export controls on rare earths and battery minerals for 1 year. Gold jumped more than 2% on Monday, climbing back above $4,100 an ounce as soft U.S. data strengthened expectations of another Federal Reserve rate cut. Spot prices hit $4,100 before easing to about $4,085. Now, the gains come as markets react to slowing employment and consumer figures as a tentative deal to end the U.S. government shutdown raises the prospect of official data returning. Analysts say a reopening would revive December rate cut expectations and refocus attention on America's worsening fiscal outlook. Gold is still up more than 50% this year, supported by safe haven demand and heavy central bank buying. Sibanye will pay $215 million to settle its long-running legal battle with Appian Capital Advisory over a cancelled $1 billion deal for two Brazilian mines. The South African miner abandoned the acquisition in early 2022, prompting Appian to sue for more than $1.2 billion in London. A UK court later ruled Sibanye had unlawfully walked away, with a trial on damages due to start this week. The settlement lets Sibanye avoid a potentially much larger payout and removes an overhang that analysts say had weighed on the stock. Shares jumped more than 6% in New York, with Sibanye now valued at nearly $12 billion. Chile's Codelco and SQM have won approval from China's antitrust regulator for their planned lithium partnership in the Atacama Salt Flat. It was the final major hurdle for a deal announced nearly 2 years ago as Chile moves to expand state control of its lithium industry. China imposed conditions requiring both companies to guarantee fair, benchmark-linked supply to Chinese buyers and avoid sharing sensitive industry data. SQM said the terms mirror its current commercial practices, while Codelco expects the remaining Chilean sign-off by year-end. Iron ore slipped to its weakest levels in months on Monday as soft demand in China and rising port inventories weighed on prices. Dalian futures briefly hit their lowest point since July before recovering to end flat, while Singapore prices hovered just above $100 a ton. Shipments have dropped to a 2-month low, helping limit further losses, according to MySteel. Now, sentiment also improved after China suspended port fees on U.S.-linked vessels, and inflation data showed signs of stabilization. But analysts say weak steel demand and wider production cuts are still capping any meaningful rebound. That's where we leave your news headlines for now.